Hey guys, what's up? Welcome back to another video. In this video, I'm going to be talking about a stock that I found in the market recently that could be trading below intrinsic value per share. And that stock is BorgWarner, I think that's pronounced. And we can see that over the last year, they're basically keeping up to pace with the rest of the market. They're down about 14%, and the S&P 500 is down about 16%. So they're slightly outperforming the market by about 2%. But then we can see over the 5-year chart, they are definitely not doing as well. They're down about 25%, while the S&P 500 is up nearly 50%. But at the current share price, it looks like they could potentially have some attractive growth prospects in the near future here based on some recent events that came up, as well as some growth in their financial statements. And so we're going to look into that to figure out if this is a good buying price to buy into this company from a value investing perspective. And so first and foremost, I found this article that talks a little bit about BorgWarner and how they're basically going to try and focus on electric vehicle technology. And so for those who don't know, at the moment, BorgWarner basically builds systems and components for cars and trucks, but they've mainly been providing these services to some of the larger car companies like GM and Ford for a while, and primarily focusing on diesel cars. And so now they're trying to expand into electric vehicles in order to grow their market share and their footprint in the automotive industry. And so right here, they point out that BorgWarner essentially acquired a company called Delphi Corporation in October 2020, and that gave them a little foothold in the electric vehicle business. And then on top of that, we can see that if I scroll down a little bit here, they talk about how the company is trying to basically diversify into potential growth opportunities in other alternative fuels like hydrogen and obviously electricity. And then lastly, if I scroll down here, we can see they point out that as a result of these growth initiatives, the company believes that they'll be able to achieve or exceed their stated target of about 25% of their revenues coming from EVs by 2025. And so if they were able to do that, then that would obviously be really beneficial, because that is where the automotive industry is moving towards, is more so towards renewable energy and electric vehicles as opposed to diesel technology. So that's definitely something that a lot of companies that rely on diesel technology are going to want to try to do. I also found this pretty interesting article that's sort of unrelated to the stock analysis I'm going to do, but it definitely caught my eye, and I was a little taken back by it. That was kind of interesting. But basically, a former BorgWarner executive was left out of the U.S. Russia deal where they freed the WNBA star Brittney Griner. And essentially, we can see right here, they point out it's pretty small, but it says in 2020, Paul Whelan, I believe that's pronounced, former security director of automotive supplier BorgWarner and a former U.S. Marine, was sentenced to 16 years in prison. And essentially, this guy was sentenced to prison as a result of spying charges that he denies when he went to Russia. And when President Biden negotiated with Putin as part of negotiations to try to get Brittney Griner out of jail, apparently negotiations were in place talking about whether or not they would be able to free this guy, who used to be a former executive of BorgWarner, but those ended up falling through, and they ended up releasing I believe it was a arms dealer in America. They released him back to Russia, and then they freed Brittney Griner, but they weren't really able to free this former BorgWarner executive. So that was just something interesting that caught my eye. It doesn't really relate to the stock analysis, but it is interesting news that's related to BorgWarner. And so right here, we can see their balance sheet comparing September 30th, 2022 to December 31st, 2021. And during that time period, total assets basically stayed the same at around $16.5 to $16 billion. And we can also see, if I scroll down here, that their business is mainly financed by liabilities compared to equity. They have $9 billion in liabilities and $7 billion in total equity. And then we can also see that their retained earnings line item has increased from $6.6 billion to $7.2 billion. Definitely a good sign that their retained earnings are increasing, because that gives them capital on their balance sheet that they can use to either redistribute back to shareholders through dividends and share repurchases, or also to reinvest into the company. And so if I scroll down here, we can see this is their income statement on page 6. They're showing that their total sales have increased from $3.4 billion to about $4 billion year over year. And that's mainly a growth of around 17% year over year. So not bad growth for their top line revenue. And then for their bottom line net income, we can see that's up from about $96 million to $273 million. So that's an increase of about 184% on their bottom line net income. So that is definitely extremely impressive earnings growth for BorgWarner year over year in a time where overall the S&P 500 is down. But surprisingly, BorgWarner stock is also down even though their earnings are up over 100%. So that's a little interesting. There could be some mispricing happening in the market that some investors could potentially be able to capitalize on maybe. And so lastly, right here, we can see their cash flow statement for the first 9 months of 2022 compared to 2021. And during that time period, they had around $679 million worth of operating cash flow. And then we can also see, if I scroll down here to their financing section, that they made payments to repurchase or to purchase treasury stock of around $240 million. And they also paid out around $121 million worth of dividends to BorgWarner shareholders. And so that's basically almost $400 million worth of capital that's been returned back to shareholders in 2021 in a period where operating cash flow was only around $600 million. So they're returning a pretty large percentage of their operating cash flow back to shareholders. And that is something that makes BorgWarner a pretty attractive investment, that they're returning that much value back to shareholders. And right here, I have a discounted cash flow model, basically trying to figure out the intrinsic value per share for their company. Yahoo Finance is estimating that this company is going to grow at around 20% year over year for the next 5 years. And so I cut that in half to around 9% for the next 5 years after that. They had around $638 million worth of free cash flow in 2021, and they have about around $3 billion worth of debt if you subtract the net cash on their balance sheet. And then they have around 234 million shares outstanding. And so that puts their intrinsic value per share at $51.99 per share, which means that they're currently trading below intrinsic value per share at $40 per share. They're almost trading at a 30% margin of safety relative to their intrinsic value per share if they're able to grow at these projected growth rates of around 9 to 19% for the next decade or so. So based on this, it looks like they could potentially be presenting a good buying opportunity at the current share price. And on the right-hand side here, I also compared them to some of their main competitors in this industry, Lear Corporation and Allison Transmission. And in comparison to their competitors, it looks like BorgWarner is middling pack. They're basically ahead of Lear Corporation, but not doing nearly as well as Allison Transmission. Allison has the leading profit margins and return on assets in comparison to their competitors. They have 45% compared to BorgWarner's 19%, 18% compared to the 3%, and 9% compared to the 3% for BorgWarner. So from a competitor analytical standpoint, just looking at the financial ratios and the pure business efficiency of each of these companies, looks like Allison Transmission would probably be the buy from a competitor analysis perspective. But from an intrinsic value standpoint, it definitely looks like BorgWarner is trading below intrinsic value per share at the moment. Intrinsic value per share looking to be around $52 per share. So if they were to increase to their intrinsic value per share, that would be an increase of about 25 to 30% from their current share price. So it'll be interesting to see if they're able to get up to that share price. They were trading near there at around the start of the year in 2022, and they've since declined. So if they can get back up to that point, then anyone who buys into the company at the current share price would be able to reap that return of around 25 to 30%. But it's tough to say because operating wise, in terms of operating history, looks like their stock price hasn't really been performing that well. They are up from their lows in 2020 when they were trading at around $23 per share. But since then, their stock price hasn't really been doing that good. So I'm not sure if I'll be buying into shares of BorgWarner, but I'd love to know what everyone watching this video thinks about this company. Are you guys going to be buying into this company? And definitely let me know what other stocks you guys are looking at in the stock market that you guys may be interested to see me talk a little bit more about. Leave a like on the video, subscribe to the channel, and I'll see everyone in the next one.